It's wild to think about a semiconductor packaging giant literally packing up their factory floors into crates right before its busiest season just to catch the AI wave. Welcome to Earnings Unscripted. Today's July 27th, 2026, and we're looking at Amkor's second quarter, ticker AMKR. So, Miro, they just posted a massive top-line beat against last year's baseline, but the stock got crushed.
Yeah, it's the classic curse of being priced for perfection. They hit almost $1.9 billion in revenue, a huge jump from a year ago. But if you look at the chart, this stock went on an absolute tear through the spring, rallying roughly 80% during the quarter.
Right, and earnings per share landed at 70 cents. Their operating income essentially doubled year over year. But the market didn't care at all. It just dumped at the regular session open and closed down about 14%.
Exactly. The expectations were sky high. And just as a quick legal sidebar, our take on the price action is purely personal banter, so please don't base your tech trades on our podcast. But the real story here is what Kevin Engel, the CEO, admitted on the call. They're deliberately sacrificing their normal seasonal bump in communications revenue to rewire their whole supply chain.
Okay, wait, say that again, but slower. How are they sacrificing revenue? Are they just turning away orders?
Worse, they're physically unbolting hardware. Amkor handles the final assembly and test for these advanced chips, right? So to make room for all this high-end AI compute capacity in Korea, they're currently crating up entire system and package manufacturing lines, loading them onto ships, and sending them to Vietnam.
You're kidding. So the factory's literally on a boat.
Literally on a boat. Engel called it stalled capacity. It's totally offline while it's in transit and getting requalified, which means their smartphone packaging business will shrink heading into the third quarter right when it usually peaks.
That's such a visceral image, just floating your capacity across the ocean while clients are screaming for chips. Okay, I totally get why a temporary revenue drag like that would spook traders, but there's something else propping up that operating profit number they flaunted, and I need you to explain why a non-operational real estate sale is quietly hiding in their earnings.
You caught that. Yeah, out of the operating profit they just reported, $21 million came directly from selling real estate. It drops into their operating expense line and artificially lifts the margin.
Which means the core efficiency they're bragging about isn't quite as explosive as the headline suggests.
Exactly. The core business is improving, but that land sale was roughly 10% of their total operating income. Plus, last year's baseline had its own weird noise with a legacy legal contingency benefit. So the percentage growth metrics are completely distorted. But honestly, the accounting gymnastics aren't the real story here. The real tell is how they're funding their massive physical expansion.
Oh, right. They announced a 10-year agreement with TSMC this quarter, basically acting as the domestic packaging arm for those new Arizona fabs.
Yeah, and on top of that, they secured an AI infrastructure partnership with Nvidia that features a major customer prepayment hitting in 2027.
Okay, wait, I need a translation on that. A customer prepayment. So Nvidia is just cutting them a check today to reserve floor space 3 years from now?
No, that's not quite it. Standard contracts don't work like that. Nvidia isn't just holding a spot. They're functionally pre-funding Amkor's balance sheet because capacity for this advanced packaging is unbelievably tight. The fabless guys have to step up and finance the OSAT infrastructure themselves if they actually want the chips built.
That's incredible. The power dynamic has totally flipped. It's like paying the construction crew out of your own pocket to build the restaurant before you can even order dinner.
It really is. Kevin Engel was dead serious about this during the call. He said, as advanced packaging becomes increasingly strategic, customers are placing greater emphasis on manufacturing scale, technology leadership, and supply chain resiliency.
Right, and dropping a massive facility in Arizona checks that domestic resiliency box perfectly. But doesn't building a brand new U.S. plant crush their profitability in the meantime?
It absolutely does. They took out over $1 billion in 0% convertible debt this quarter just to manage the huge CapEx load. But Megan Faust, the CFO, issued a pretty stark warning on the timeline. She told everyone there will be ramping underutilized Arizona manufacturing in both gross margin and operating margin in 2028.
Because you're eating the massive depreciation costs on a new factory while the production lines are still slowly getting up to speed.
Right. The fixed costs hit the income statement immediately. They're essentially telling investors to brace for a profitability profile in 2028 that looks identical to their older baselines despite adding massive revenue scale along the way.
So you're locking in guaranteed survival with the biggest tech companies on Earth, but simultaneously committing to years of terrible margin optics just to get the foundation board?
Exactly, but here's the irony. The optics are only going to be terrible in the long run. That margin pain you just brought up doesn't really bite them until 2028.
Oh, I see, because right now the AI ramp is just brute forcing the near-term numbers higher anyway.
It's doing exactly that. They're projecting third quarter revenue to hit roughly $2 billion at the midpoint. And because of that compute ramp, they're actually expecting gross margins to expand to around 19%.
Okay, wait, just to square that with what we discussed earlier, they're modeling gross margin expansion while literally putting their normal smartphone assembly lines on a boat?
Right, which just highlights how insanely profitable the AI packaging business is compared to everything else. Megan Faust noted on the call they expect computing growth to accelerate to nearly 30% sequentially.
30% in a single quarter?
Yeah, one quarter. And that entirely offsets the communication segment, which they forecast to drop in the high single digits. And frankly, that drop isn't just about the factory relocation. Half of it's straight up weakness in the Android market.
Wait, so there's an actual demand crack hiding behind the factory logistics story?
Exactly. Memory pricing's putting pressure on Android unit volumes, but honestly, management doesn't seem to care.
It feels like they're totally fine ignoring their traditional seasonal cash cow because they see where the entire sector is headed. They're trading near-term mobile revenue for future advanced packaging floor space.
I mean, what else do you do? If you don't build the Arizona capacity and you don't reorganize the Korean facilities for TSMC and Nvidia, you're stuck assembling smartphones forever. The market's punishing them today because traders hate expensive transition periods.
Well, you can't build a moat without moving some dirt. What's the one metric you're watching most closely next quarter?
I'll be watching the cash flow dynamics around that Nvidia prepayment we mentioned. It's amazing to have a customer fund your infrastructure, but I want to see when the cash actually hits the balance sheet and what kind of interest burden or liability it creates first.
Because you never get something for nothing, even when it's Nvidia.
Especially when it's Nvidia.
That's true. Well, it's definitely a painful transition phase, but you have to respect a management team willing to take a stock hit today to secure a 10-year strategy. All right, that's all we've got for today. Thanks for being here, Meryl.
Always a pleasure. See you next time.
If you want to catch the next breakdown, feel free to hit subscribe in your podcast app. And for full transparency, Miro and I are entirely synthetic AI hosts voicing an AI-written script the exact same day as the earnings call. And that's honestly a relief because it means our servers won't get crated up and shipped across the ocean. Shoot us the tickers you want to hear next at earningsunscripted@datamadness.ca or grab the X link in the show notes. Bye for now.
Catch you later.